Okay, we are pretty much in the home stretch. Now, what I've done is, so in the prior videos, we looked at our cash collections, we looked at our cash disbursements for purchases, and now what I've done is filled in the rest of these assumptions so that you don't have to sit there watching me attempt to type. All right, so let's fill the rest of this thing out quickly so that we can get to sort of the meat of this challenge, right? So let's just focus on June through September. Right, so our total collections are given up here. So we pick that up, and we can pick up our inventory payments as well. So let's see, our total payments 189. So there they are. All right, so we can copy these across. That's easy enough. I can get my thing to work. Okay, now we have other assumptions about our cash outlays. We have 20% of sales in wages. We have lease payments every month. We have interest payments coming up in June and September. We have a dividend that we are going to pay in June. Our tax prepays, I forgot to write that in, are also in June and September. And we are looking at a capital investment, and I'm sorry, I wrote the word September, but what I should have written was July. We have a capital investment coming up in July, and then we have to, we'll worry about this cash stuff in a minute. So let's just fill out the rest of our disbursements for June through September. So our wages are going to be 20%, and we are going to make that an absolute cell reference, so I don't wind up with crazy numbers. It's 20% of sales, so here's our sales. Okay, and our lease payment is just that $10,000, which we will also make an absolute cell reference. And those two we can just carry across. Okay, now our interest payments are getting paid in June and September. Now there is a way to set something up so that we can auto look up when when these payments are going to be made, but I don't feel like going into that right now. It's not part of your book, and hopefully we'll get to that kind of thing later. So anyways, our interest payment in June is 30 grand, and in September it's also 30. And our dividends that we're going to pay, $50,000 in June. And our taxes, we are also going to pay in June and September. We just grab those from the other sheet. Our capital investment, so we are looking at spending some serious money in July. $200,000, and that's part of what we want to do this budget for. We want to see, when we can afford to do this. So here's our total disbursements, and we want to make sure that when we're using this sum function that we get all of those rows, including the rows that are blank, just in case we move things around. Okay, so our total disbursements there are 381.5, etc. Going over here like that. I'm going to pause it for a minute, refer to the textbook, and I will be right back. Okay, so those are all right. I just kind of wanted to check what I had done. The thing is, right, so down here, we got to figure out, whether, first of all, whether we're going to be able to afford this capital investment, and secondly, whether we are maintaining the cash balance that we say we need. Okay, so our beginning cash balance here was that $20,000 that we have over here. Okay, so there's our beginning cash. And what we want to do now is figure out whether we had a positive or negative cash flow for the month. I can see that it's negative, right? So I collected $362,000 and I dispersed $381. right? So I had a negative cash flow for the month of June of 18,800. And I'm supposed to keep 15,000 there in the bank, right? So my unadjusted cash balance, what I do. So this is how you figure out whether you need to borrow money. So I've basically got $1,200 left in the bank. Okay, that's too low. So it is not uncommon for banks or for just management to require a company to keep a certain minimum in the bank for working capital. And if they don't have that minimum in the bank, then they can go and access what's called their working capital line of credit. So you set up a line of credit. It's basically kind of like a credit card. You set up a line of credit at the bank, and the deal is that if you need to borrow the cash is there, but you only pay interest on what you actually use, right? So lines of credit, very important for all businesses. And so this is what we're going to do, right? So we got to figure out how much we need to take from that line of credit. Well, you know what? I'm going to take and put this minimum acceptable cash number here just to keep us on the literally on the same page. It's easier to not have to hop around between spreadsheets. All right. So I need to borrow enough to get me to $15,000. Okay, so let's figure out how much that is. Okay, I need to borrow 15 minus 1,200. So 13,800, right? And if I do borrow that, then my ending cash balance is going to be acceptable. All right, so far so good. Okay, so now here's my ending cash balance. I take that up here as my beginning cash balance, like that. I copy the rest of these formulas across. I did not, yeah, it's an absolute cell reference problem again. I'll tell you what, that messes you up more than you can imagine. Oop. There we go. Okay, so let's try this one again. There we go. All right, so now we can go ahead and copy this across, right? So it looks like I need to borrow $91,000 in July, which is not surprising because even though it's my biggest, it's a comfortable sale month, I still, I have that capital investment that I'm going to do then. Okay, so let's go ahead and copy this across again and see what happens. Okay, so now in August, right? In August, I see that I have actually a pretty healthy positive cash flow here. My positive cash flow in August is $106,000. And so this is kind of a weird result here, right? I've got a negative current borrowing number of 106 grand to get me to an ending cash balance of 15. Now, negative borrowing is not the same as paying back. All right, this row says borrowing. It doesn't say borrow or pay back. Right, so we need to do something different about how we're making decisions here, and we do that with another one of our logical functions. So I'm just going to take notes down here, right? We need a logical function for borrowing. Okay, in English, it needs to say, if I'm short on cash below 15,000, then borrow to make up the difference. Otherwise, if I'm not, we'll say, then don't borrow. Okay, so this is our English statement that we need to basically translate into Excel speak, right? So in Excel speak, it's a function. So it's a function. It goes if, we'll say unadjusted cash is less than minimum required, then borrow up to 15 grand, otherwise don't. Okay, so this is kind of close to the actual if statement we're going to make. What I'm going to do is, well, first I guess what I'll do is actually do the if statement in Excel to make sure that I calculate it right. So I want to say here, if unadjusted cash is less than what is required, so if this number here is less than the minimum acceptable cash, which we are going to take as an absolute cell value, then borrow the difference, so it's this 15, again an absolute cell value, minus the unadjusted cash balance, otherwise 0, because there's no borrowing. So let's see if that works. And I'm always nervous when I write these things out, even though I've been doing them forever. All right, so that gives us our 13.8 again, which is what we were expecting. And that's going to give us our 91.4 again, which is also what we were expecting. But now, hopefully, this will give these last twos as zeros. And it did. All right, so this is where we left off in class on Thursday. We're going to complete the working capital analysis next. So we'll do that. I'll probably make some videos in advance of class if I feel ambitious this weekend. But this will get everybody who wasn't there up to speed with those who were there. So enjoy.